everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is John Woods, president of J.J. Woods Associate and a floor trader on the Nymex. John, nice to have you back.
Good seeing you, Mike.
I haven't seen you in a while. Tell us what's happening in the energy markets. Why don't we start off with natural gas? I think we've had some price movement to the upside. Is that going to last?
Finally. No. We actually peaked our head above $4 today for the first time, and God, who knows when. It was coupled with weather forecasts that we weren't anticipating when we were trading right around that 360 mark, which before was our technical high. That with West Coast cold coming in, the Northeast getting colder, you just saw a technical market take over rather than looking at the fundamentals. I mean, you look at natural gas, there is a ton of it out there. But if I'm sitting down like I was, I'm looking at it, I'm not selling it right here. I'm going to wait. It's going to hit these marks, and sure enough, it did. It slowly moved its way up. I mean, we had like a 14-day run where we just made new highs, and we settled higher every day.
Now, we got down into the, was it the low twos on natural gas, into the two handle?
Yeah, that was a while back. Our lowest was actually 305, not too recent. And that was, what, a couple months ago, and then that's when we started. So essentially, we've had almost $1 moving in nat gas, which is huge.
Now, what you think it'll start to settle back down into the low threes again?
Oh, most definitely.
And it's very much an economic story as well.
Right.
You know, the economy, it's improving, but it's very weak. We're seeing now the sequesters, spending cuts, things that may contribute to an even slower economy as we move through the rest of the year. So a continuation sort of, I guess, of the bearish pressure in nat gas.
Oh, most definitely. I mean, this market has been a bear market forever. And what we're looking at right now is lack of industrial demand. Like you just said, the economy is coming back, but you're not getting that demand that you had from industry before. You're seeing plants that are shut down and partial openings. So what we're looking at right now is for nat gas to retrace itself back down to those low threes and actually probably before the summer starts, break down and get down to that 285 mark.
Now, on the supply side, and we all know that there's, you know, an oversupply at the moment, but what about the producers? I mean, what percentage of producers can operate profitably at these price levels? Doesn't this suggest over time, you know, a diminution, you know, a cutback in the amount of production that's going on? Oh,
it's definitely. I mean, what you're seeing is, you know, these guys are not making the money that they used to when, you know, nat gas was $6, $7, $8. So you're seeing a smaller group actually churn it out right now, and they just can't produce it right now. I mean, if you produce it, you're going to back up the pipes, and that's going to hurt you even worse. So they're very, very skeptical about really just, you know, producing a lot of gas out there because, quite frankly, we really haven't used it. We've had a mild winter, and you know, we're going into the spring, and there's really not that much of a demand come springtime.
Yeah, but it'll take time. It'll take time for that you know, production decline to happen.
Right.
Let's talk a little bit about crude oil. I think an interesting development has been now the pipeline that oil flowing from Cushing, where there's been an oversupply there and storage down into the Texas, the Houston Bay Area, and how that's playing into not just the WTI price, but the spread between WTI and Brent, which was very wide. You think that'll narrow?
Well, I think so. I mean, you know, what happened with the Brent-TI spread, it was a great spread. Everybody was buying the Brent. You had all these stories coming out of the Middle East, and you had to sell something, so you sold the TI. So eventually you're going to have to unwind your position. That's one reason for that. The other reason for the TI is that, you know, we're slowly, you know, getting our range. We really haven't had that news story that's going to propel us above $100. We get up to around 95, 96, you look around, and you're like natural, it's more of a technical move than anything else. Like today, we're down about $1 or so. You get down below $90, right around $88.50 to $89, everything being the same, it's a good spot to buy. Reverse of that is upwards of $94 to $95.
How do you find it seems to track also the equity markets? I mean, which have been very strong. Dow making new all-time highs, S&P up near its high. So it seems to track that. So is that sort of how some people play it?
Well, they're looking for for information when you're trading the crude oil market. If you look to the Middle East, there's really not a lot of stories coming out of there. Then you look to the equities. You say, all right, what are they doing today? Also, you look to gold. You're looking at the dollar. There's a multiple of things that you can look at, and this is what happens when you have a market that's a global market, unlike natural gas, which is primarily domestic. You're looking at a crude oil market, like, all right, this is a hot zone right now. Now I have to look over here to the crude, to the equities, and it all comes into play.
Have you seen any change in the participation in the sense that, we went through a period where we saw a lot of speculation, a lot of maybe smaller investors involved in the energy markets. Has that cooled down a little, or is the action still there?
Well, I think it's cooled down somewhat in the crude, gold, and silver. It's picked up in the natural gas. But what I have seen is that the participants are taking the money that's there. They're not stretching it. In natural gas, they're taking what's there. Same with crude oil. You're looking at, let's say, a $4 profit. Man, they're taking it. No one is holding onto positions. They're not married to them anymore.
And how much have these ETFs had an effect on the market, in your opinion? I mean, the things like USO, the oil ETFs, you think they've had a big impact or not such an impact?
Well, I think what they've done is it's given somebody a vehicle to get into the market. And I think, anytime you can get into a market and contribute, it helps the economy. So, the more outlets you have to trade, more outlets you have to invest, I think it's great. I don't see any downside to these.
What's going on the Nymex? I mean, you've been there a long time. I mean, with all the electronicization of the markets, I mean, what sort of customers still transacts directly through the Nymex?
Well, with us, we deal with a lot of funds and a few refineries. They have a lot of things to watch. So what they'll do is say, all right, take this and let me know how it works out. I mean, you gotta understand that in natural gas you can get run over real quickly. So what we're seeing is some people just tired of putting something out there, getting run over on some news story, and then finding out it was bogus. So the human element, the human touch is still there, and hopefully I'll still be there for a while.
Some would argue that that's still better than the electronic approach.
Oh, yeah, some will. I mean,
computer, the human over the computer,
and that's that's true. I mean, it's you're going to call somebody and say, "What do you think?" Unless you want to buy it or sell it, use a computer. And the computer's opened up to everybody now. So you're seeing a lot more people come in and just get into the market. But people that really are just they have their strategy. They'll say, "All right, what do you have here?" And plus, we're market makers down there.
All right, short to medium term outlook for energy. Sounds like you're a little bit cautious here.
Yeah, very, very. I just think
play the range, right?
Yeah, just don't reinvent the wheel. Just take what it gives you. Take your money, go home, and be happy.
All right, John Woods, JJ Associates.
Mike,
thank you very much.
Thanks, pal.
All right, that's it for now, folks. This is Mike Norman saying, see you next time. Bye bye.